Let's get started. Good to see everybody. Welcome to another session of supply and demand zones that work. Let's go through this. We have another mini lesson to go over and some more trading opportunities from yesterday and today. We've been doing these sessions all week, so you can learn a little bit and see how we apply the original supply-demand strategy to the many different financial markets. Remember, the Pinnacle Institute is not a registered investment advisor. I am a licensed fund manager, but Pinnacle Institute is not a registered investment advisor. And there certainly is no guarantee of success. In fact, available research does strongly suggest that most active traders lose money. So take your time, be careful, make sure you understand the risk, make sure you're okay with the risk, and don't rush into doing this until you're confident that you know what you're doing. The lesson for the day is news and price, a perfect relationship that most traders and market speculators think backwards. I thought this was appropriate because tomorrow is NFP, so a big number that comes out here in the US in the morning, the jobs report. So let's spend a few minutes on how news and price work together. So I want to start, well, we have all kinds of news that can come out, right? News, economic reports, all that stuff. And here's the thing, the report, right, or the news, the economic report, the earnings report, whatever it is either going to come out as expected, or it's going to come out better than expected or worse than expected, right? Those are the only three possible outcomes when it comes to an economic report, a news report, whatever, from any, and it's not just the United States, it's anywhere, right? All around the world, major markets are releasing reports constantly. So again, those reports are going to come out either as expected, better than expected, worse than expected. Reports that come out as expected, not a big deal. Not much happens, right? Price doesn't move all that much. Why? Because you don't have a big surprise, which means you don't have a lot of new people invited to buy or sell in the market, and that's the key. If the news comes out better than expected, what happens? A lot of people say, oh, that was better than expected, and they push the buy button, right? All that demand coming into the market drives prices higher, okay? And if a report comes out worse than expected, well, typically a lot of new sellers or supply comes into the market and drives price lower. So it's what happens during that and after that we're most interested in. For example, right, this list in the middle, I mean, there's some big ones on there, some secondary numbers on there, and there's plenty more numbers and reports and everything out there that can come out. If the forecast, for example, or the actual report comes out pretty close to the forecasted number, not a big deal. You don't have a lot of new buyers and sellers coming into the market usually. However, if that report comes out, again, much better than expected, when the actual number is much greater than the forecasted number, that brings in a lot of new buyers. That typically drives price, all that demand coming into the market, drives price up to a level where supply exceeds demand, where we often want to be a seller, right? Just like if the actual number comes out much worse than expected, that typically brings in a lot of new supply and not a lot of people want to sell on that news. That drives prices lower to a price level where demand exceeds supply, where we typically want to be a buyer. Okay. So it doesn't mean buy when the news is bad and sell when the news is good. It's when that number is unexpected and brings in enough buyers, new buyers, to bring price up to supply. That's when we want to be a seller, when price is at supply and that profit zone below is huge. Just like if the number comes out worse than expected, that'll drive price lower down to a level where demand exceeds supply. And if the profit zone above is large enough, we want to be a buyer. Make sense? So, and that's kind of what the screen shows here. When price reaches the level where demand greatly exceeds supply with a large profit zone, the probability is typically high, but it's going to take a very negative number for that to happen. Like I said, tomorrow we have NFP coming out here in the US, so I thought this was an appropriate lesson for today. Looking at some trading opportunities that have met entry in our sessions. Again, the screenshot on the left, these are screenshots right out of the live sessions from this week. We looked at this one already. The others are new, but just to kind of, so we can get some context as to where the market has turned and where it's gone to. Yesterday, price declined all the way down to our qualified demand zone here in the S&P, right? Competition to buy at demand causes price to turn and pushed it higher. This rally yesterday, this is yesterday, okay, this rally yesterday just took price up to our qualified supply zone here in the S&P futures, the 4303. We hit that late in the day yesterday. We came up there again, got close today and fell. Why? Because price reached a level where supply exceeds demand. Another way to say all this is yesterday, price came down to wholesale levels or our buy zone in the S&P, and then rallied up to retail prices or a supply zone or our sell zone, whatever you want to call it. Demand, supply, wholesale, retail. This is how markets work. This is how and why prices turn and move in markets. It's all about identifying those real supply and demand zones. So this is yesterday into today. Now, during today's session, one of our live sessions today, we had price rally up to our qualified supply zone right here. Notice the rally base strong drop. Notice how fast price moves away from the level. And then notice, there was just a big profit zone here, right? The big initial profit zone created with that drop. Yesterday, price came into that area for the first time. Today, we went just a touch deeper into the zone. And then, of course, today, price fell pretty strong. The NASDAQ futures fell over 200 points from that supply zone today. And then the NASDAQ ETF, the QQQ, came into the same rally base strong drop supply zone and fell about $5 from that zone today, right? Now, the other thing I want you to notice here is not just the profit zone, but notice how far price is from fair value. Here's 354, current fair value. There it is. So this tends to act as a magnet for price to pull it back down to that current fair value. Does that make sense? Okay. And then, of course, the big move this week was in oil, which hit a very high probability supply zone. We rank all of our supply and demand zones based on probability and profit zone. And because of where this one, well, a couple things based on our structure location rules, this one was a very high probability zone, and oil prices have come down sharply from there. Great question in the chat. Doing this more difficult. How do we manage emotions? So everything we do and everything you've seen me, share with you this week, all of the opportunities, demand, supply, all that, the lessons, it's all rule-based, all 100% rule-based. And to really deal with emotions, in our opinion, it's making sure that everything you do is rule-based. Rule-based structure location analysis, that's the original supply-demand strategy. And then how to make money with that, right? So entry, stop, target, position type, position size. And it's important to think of this the right way. So when you think of strategy, I want to share with you how my mind has always looked at it. Under the strategy heading, there are two pieces to that. On one side, it's market timing, the supply and demand strategy. Where's price going to turn? Where's price going to move to? Right? But then on the other side is, okay, once you get good at supply and demand, well, how do you make money with that? Right? Well, that's when it comes to, again, position type, position size, right? What market are you going to trade? Entry, stop, target, all of that decision-making process, everything around that needs to be rule-based, if that makes sense. Okay. Price can definitely drop to demand and then move to supply. That's what happened this week, right? So yesterday in the S&P, price fell to demand, and then by the end of the day and into today, rallied up to supply. Right? Right up here. And now price today is back down. Right? That's how it works. That's how it worked on the when I was on the trading floor of the Chicago Mercantile Exchange many years ago. I saw that every day, every week, every month by handling the facilitating buy and sell orders on the trade desk. And all I did was transfer that information onto a price chart, and this is what it looks like. Anyway, hopefully that was helpful. And we will be back at it next week with more of these trading opportunities and the mini lessons, and we'll keep going. All right. Have a great rest of your day.